Where should we go?
First, I think panic, but I guess Marcus and Millichap have a little bit of a different idea. I always like to panic first, and then then I look at the numbers. This one's called High Speed Cycles Require Long-Term Thinking, and fairly describes, actually, I think, the methodology of our latest report, which you can download at graycapitalllc.com/window. But also, John Chang does a great job of keeping with the pulse of what people are talking about and the current events. However, this is more related to medical office. He talks about some demographic shifts and the aging boomers and his specific points about medical office, but it did help me to, it always helps me to, as a jumping off point and as a way to frame a lot of the issues that we're seeing here. Specifically, this idea that the data is not really helpful. For the past few months, there have been shifts from optimism to pessimism about the market, along with changing interest rate assumptions. There was a time, I think it was like August and September of last year, when rates were really low. Expectations were super high. But then by the time NMHC rolled around, that enthusiasm dwindled. And now, even past NMHC, we are in this like post-dwindling where with economic uncertainty, there's a shakeup to come even, I think. And that means that like some of the investor sentiment surveys that we see here, I looked at, they're in January and February, and it's like, well, are they thinking different now?
Well, there was a period where everyone saw a new administration coming in, and everyone was like, "Oh, great! We don't know what Doge is, but it's going to make the government better. That's good. Reducing government spending. Like, I don't know how we get there, but that's good. But by the way, also huge tax cuts. Oh, that's really good and exciting. And we're going to bring back 100% bonus depreciation. Oh, that's really exciting. All of these good things that were
getting
being
rid of
talked
the penny.
about." Yeah, getting rid of exactly. Fine. And so like, all of these like pro-growth, plans, but then once we started, it was like, oh, yeah, we're not going to do the pro-growth first. It's all going to be like, no carrot yet. Like, all stick. All stick.
Yeah. That is, it's almost word for word what I've been reading in a recent article for sure.
Yeah. Well, maybe they copied me.
That's right. Yeah.
But so John, and we this is how we started the show today. But I think John Chang really hits the nail on the head of these just policy or vibe shifts can be so dramatic and change the narrative and change the forecast, and because sentiment can change that quickly, and sentiment and psychology drive markets, and I think that's what has really taken place over the last 2 weeks or so. It's a day, again, we talked about during 22 and 23, even 2024, it was like, we felt like we were on every 3 week cycle. It was like a 21-day cycle. Yeah. Now we're on a every 3 day cycle, one day cycle, even, hour by hour.
It's hard to,
I mean, I know like Trump and Putin were on, phone call that, today for an hour and a half, who knows what tomorrow is going to bring. The fact that we're talking about, and we're getting a little bit off topic, but European equities are now highly favored, and there's actually growth going on in Europe because, and a lot of this is just because they're investing in their defense industries now. But European equities and European stocks have been like the boringest thing in the world for the longest time. Then all of a sudden now there's some opportunities and some growth. And U.S. equities have been getting beat up over and over again. There's issues with NVIDIA and with China and DeepSeek and the direction of the AI kind of dominance and kind of the struggle for who's going to kind of lead the charge. It moves every single day. Yeah. And I mean, that's why we put out the research report, Multifamily Window, 2 weeks ago to try to give some clarity on the long-term fundamentals because the noise can keep you distracted and indecisive. Whereas if you can quantify the noise a little bit so you can discount it and you can step back and see some perspective of, okay, we're in a period of dislocation. These periods don't last forever. Yeah. They are absolutely the periods of where you can find the most opportunity, and you have to position yourself to take advantage of it. But you have to do that with confidence. You can't be worried that you're catching a falling knife all the time. Not that you ever have 100% certainty, but arm yourself with the fundamentals and the facts. You can filter through some of this and be like, all right, yeah, it's not going to be bad. That could be bad in the short term, but we'll be able to move past it.
Yeah, understand what trends what trends you can kind of count on, and the numbers that you don't know. Like, for instance, the video says steel prices have gone up 30%, but the CPI hasn't shown up in the CPI. CPI actually went down in February, but but like, what should be familiar to those who know about CPI's lagging rent growth data is like CPI often moves slower than reality.
Yeah.
But that doesn't mean it's not that it's not useful. It's just you got to know what you got to know what you can follow. And one of the things that we talked about in the multifamily window report is the fundamentals of apartment supply and demand. These slow moving, longer term trends of apartment supply and these drivers of demand, whether it's job growth or household growth. The scary thing is even those drivers of demand now are thrown in a little bit of flux. But I again would fall back to the long momentum that we saw in 2024, just everything steadily building. And it's something actually that we can see when it comes to investor expectations as well. They're long improving momentum in 2024, little shakeup in Q1 2025. So this is going to be exciting. Every week we will have something new to share. Maybe next week it'll be everything will shift to good.
It will, yeah. We'll get a couple of data points, or the tariffs will be receded, or if there's just a regime of where we can plan on tariffs and some related things, that reduces some of the volatility significantly, especially in trade. But